New income tax moves. The tax measures announced in Budget 2025 are expected to push up bank deposits by 42 to 45,000 crore rupees, strengthening their lending capacity, according to a senior official of the Ministry of Finance in a report quoted by Money Control. A rise in deposits is expected on the back of higher savings among senior citizens, non-senior citizens, and taxpayers benefiting from that enhanced tax exemption limit of 12 lakh rupees, he said. About 100,000 crore rupees is revenue foregone. Of that, at least 20,000 crores could come back to the banks, and not everybody will spend this. Some will be kept in fixed deposits. Altogether, some 42,000 crores could come back, according to that official, which also means that not all that money saved could go into buying consumer products, as some, and I only think some people were hoping and maybe even praying. The good news, of course, is that the increase in deposits is expected to boost liquidity in the banking system, allowing banks to extend more loans to businesses and individuals. Meanwhile, the Central Board of Direct Tax Chairman Ravi Agrawal has said the Income Tax Department has transitioned from an adversarial entity to one that adopts a more participative approach, which is, of course, nice to hear, given that it is an open acknowledgement that the income tax was adversarial at some point of time. Speaking at an industry meeting, he said that the department now operates under the guiding principle of trust first. He also said the administration is committed to fostering stability and simplifying business operations, and noted that governance in direct taxation has undergone a transformation, with policies increasingly focused on ensuring transparency and enhancing the ease of doing business. He also quoted several examples and announcements in the union budget speech that was presented on Saturday to bolster his case. While we have to wait and watch to see whether the Income Tax Department will indeed transition to a new avatar as it's promising, and meanwhile, there's a fair amount of fine print from that union budget still waiting for analysis. For example, transfer pricing is the bane of every multinational or Indian company operating across borders. Transfer pricing has seen a huge amount of litigation, crippling companies and also making it difficult for them to plan and invest ahead. The latest budget appears to have taken some steps to ease matters, and I reached out to Ajay Rotti, founder and CEO of Taxcompaas Advisors, a tax and regulatory services firm based in Bangalore. And I began by asking him to talk about the changes to transfer pricing law, and also to start by telling us what transfer pricing was about, before moving on to whether these steps indicated a larger easing of tax administration rules and regulations, and thus ease of doing business.
Transfer price is essentially the price at which goods or services are literally transferred between two related parties. So, when two related parties are dealing with each other, you can set the price in such a way that you can move profits around. You can move profits from one country to another by paying lower or by paying higher, and therefore moving profits, etc. So transfer pricing is a mechanism where those prices are tested, and any transaction between two related parties has to be like as if those two are not related, and the price at which you would have bought from a third party. That's, in simple terms, what transfer pricing regulation is supposed to do. Now, how you set the price like it would be with a third party is you find a set of comparable companies, what is their margin, what's the price at which they operate, and therefore used to do. So India continues to have a peculiar problem where our litigation is centered around those choosing the comparables. Therefore, companies would have litigation for the last 5-7 years, literally for every year on the same issue on transfer pricing, with margins being adjusted each year. And that is at least something that the government has recognized and seen the need to address. That's what has changed in the budget. And let me tell you what has changed. And the FM announced this in the speech, and there's some bit of amendment which has already happened, and some of it will come out by way of notification of rules as we move along. So what essentially they have proposed is that if you're going through a transfer pricing audit in 1 year, which means the Income Tax Department is examining whether you've set the price right, you can opt and make a declaration to tell the Income Tax Department that whatever you decide in this year for the same transaction and similar transactions, I will apply the findings for subsequent 2 years, which means you're going through audit in 22-23, for example. Of course, you can't apply it for this year, but I'm taking it as an example. And you tell them whatever are your findings for 22-23 financial year, you apply it for 23-24 and 24-25. So what happens is, what would normally have resulted in 3 orders, 3 years litigation, today comes and becomes 1 order. And with that 1 order, you are set for 3 years. I think this is a big thing. This is going to change. There are some doubts in the way it is drafted, etc. But going by the intent, I'm sure they're going to address that. And the rules are to be notified as to which form you have to use when you have to make these declarations, etc. from a multinational perspective coming into India, or even Indian companies that are having cross-border transactions, one of the biggest issues has been litigation and certainty. So this is going to make a huge difference according to me. And also, of course, it impacts the GCCs, etc. Interestingly, in the economic survey, there was a paragraph on GCCs, and there was a comment to say that there are certain tax rules which are changed and bringing certainty in transfer pricing, very specifically mentioned. So I think this is part of a larger thing. One of the really good moves in this budget from a corporate international tax perspective, I would say.
Right. And GCCs or global capability centers is something that, I mean, everyone is now referring to, focusing on, and also looking at how to make things easier. Now, you were also saying that basically the certainty in the transfer pricing regime or relative certainty is also now extendable in some ways or visible in other parts of the way the budget document has been drafted.
Yes. See, over the last few years in particular, we've not had these minor tinkerings of changing something, number of years that you can do something, or the rate of TDS and then bringing it back or rolling it, etc. Earlier, finance bills used to run into many pages, hundreds of clauses, small changes in so many sections, sometimes changes to sort of negate rulings, negate Supreme Court decisions which the taxpayers have won, etc. That has sort of reduced. Also, there are no changes. Directionally, it's been the same. They have not had tax incentives, tax holidays, which has been done away with. We've not got it back except for IFSC, which is the gift city related things. Interestingly, there are 2 tax holidays which they've extended. Normal thing, Govind, earlier, you want to extend a tax holiday, you would have done it by 2 years, another 2 years again because somebody requests. Both the extensions this time they've given for a 5-year period. Some of these are small things, but really give you certainty. Instead of extending something for a 2-year block twice or thrice, you have today taken a call to extend it once for all for 5 years.
Yeah.
So some of these are there. I think more and more, and I've now tracked and followed budgets for over 20 years, more and more it's becoming a non-event, which I think is a good thing. See, with GST going, half of it was gone. You couldn't have changes on indirect tax year on year coming as a part of budget. Now, even on direct taxes, I think we've reached a place where a lot of it is stable. Some of the things needed, and mostly because of request by the industry or even because of administration, etc., just changing. I'm not seeing any change which is sort of without a basis that's being carried out these days.
Right. So you're saying in all the examples that you've quoted, Ajay, you're saying that basically it reflects a certain directional, firstly, a direction, and then a directional stability, which, of course, people in the world of tax and audit have been asking for and continue to ask for. So speaking of what people are asking for, there's also a direct tax code coming, which people thought would be presented with the budget, but it's now being presented next week. I think there appears to be some expectation versus reality situation here.
So in terms of timing, the FM consistently was saying that it will come as a part of, we'll be presenting it during the budget session. Some parts of media and even some people had read it to mean on the budget day, etc. But that, leaving that aside, I think, yes, it's expected to be presented in the next week. The FM did give some direction and some hint on what we could expect, in my view. Because while talking of this, she said, we've done this whole thing of criminal law and brought in BNS as a replacement for IPC. And she said this same spirit of Nyaya will be continued in income tax, making it simpler, changing the wordings, language, taking out sections which are not needed, etc. So in my personal view, I think that's where directionally we are on the new tax code. I don't think she will revamp the structure. I don't think there'll be a huge change in the way income is computed. Rates, I don't think will be touched at all, because there are some TDS changes which have been done in the budget. And that clearly is an indication that those are not kept for the new bill that's coming. I think new bill is more for simplifying language, taking out sections, reducing the size of the code, etc. But it'll be an interesting watch. The other reason I believe that it may not really be a huge change is because she's not done public consultation.
Well, I thought they did public consultations, 22 subcommittees, 6,500 responses.
Yeah, but by putting out a code.
Okay. A draft in the public domain and so on. Yeah, okay.
There may not be too many radically changing the entire tax structure and things like that. But I think to be more of language simplification, which is good, which is needed. A lot of our litigation is because of some of the sections are worded. If that is going to get cleaned up, I think it's a good thing.
I saw that you've been commenting on tax exemptions versus deductions versus rebate in the context of the 12 lakh or tax below 12 lakh, which you don't have to pay anymore. So tell us about what is the confusion that exists and why is that?
Yeah, so I'll tell you why the confusion is there only for one reason. While the FM announced that there's no tax for people having income below 12 lakh rupees, when she presented the new slabs, it said 0 to 4 nil, 4 to 8 lakhs 10%, and 8 lakhs to 12 lakhs 15%, and so on. So the question was, if up to 12 lakhs there's no income tax, why is there a slab starting 0 to 4 and 4 to 8 and 8 to 12? Does that really mean there is tax? But what does this whole no tax below 12 mean? And I'll tell you why it's structured that way. Is the no tax up to 12 lakhs doesn't come because of the slabs. One way to do it was to say 0 to 12 is nil, and 12 onwards you start paying whatever taxes you do. When you do that, Govind, what happens is anybody earning less than 12 lakh rupees is completely out of the tax rate. He or she need not even file a return of income because you're below 12, right? You don't need to file. So the way they've done this, and this is not something that they've done this year, this is how the earlier 7 lakh limit of no tax was also there. So there is a rebate given. Rebate is a reduction from your tax liability. You compute your tax liability and you reduce the relief that is given as a rebate. So they have said 60,000 rupees or your actual income tax, whichever is lower, you get as a rebate. So at 12 lakh rupees, your tax liability is 60,000. You compute 60,000 and you say, I have a relief which I'm eligible for 60,000, which is an unconditional relief. You don't need to do anything. You don't need to invest anywhere. Nothing. You just straight get it in your return of income. Therefore, your tax payable becomes zero. What this does is it protects taxpayer base. So all the people who are filing return of income will continue to file returns of income. And then if there were whatever 6, 8 crores, 7 crores, whatever that number is, were filing returns will suddenly not become 1 or 2 crores today. Therefore, one way it is good because you are giving relief, but you're not taking anybody out of the entire tax compliance in the net. Then the question was, is there why would somebody have to file return if there's no tax liability? But as we moved over the last few years, I don't think you need anybody to file your simple income tax return. It just happens online. I think in balance, it is good. The last and the other reason why they have done this is for people who are above the 12 lakh limit. So assume somebody is getting 50 lakh rupees. Then that person doesn't get the benefit of 0 to 12 lakh rupees. There is tax payable. Therefore, you are giving this relief only to people who are below 12 lakhs. People who are earning more will pay tax, but at a different slab rate, which gives them the benefit. So 2 reasons why it's structured as a relief. Does not change the liability in any manner. I think people were expecting to see that the slab itself will have become 0 to 12 is nil. And that's why this confusion has arisen.
Right, Ajay, thank you so much for taking us through both the corporate and the individual side of taxes and the fine print. Thank you so much.
Thank you, Govind.